Hi, I'm Daniel LeBeau, and welcome to the Fourth Revolution, where I discuss stocks for your portfolio of the future. Today, I'm going to be discussing Microsoft and Apple, the U.S.'s largest publicly traded companies, making up 10% of the S&P 500. These companies reported very strong earnings this past week, and these trillion-dollar companies would be undoubtedly market-moving stocks. Yet, the markets have traded down roughly 2.5% over the last 5 days of trading. And why is this? And one of the key reasons, I think, is investors are pulling profits off the table for no better reason than this coronavirus anxiety. So another good reason we would pull profits off the table is because the S&P is trading right off its highest forward PE valuation since the dot-com bubble. As you can see in this chart, we've traded significantly up since the beginning of 2019. It's a valuation push. The S&P 500 has rallied 30%, and its PE valuation has grown almost 28%. So it's pretty much entirely investors pricing in future growth. And with these big tech companies like Apple and Microsoft, it might be time to pull profits off the table. These stocks, this is a PE valuation for both Apple and Microsoft, and you can see they have seen prolific growth in their valuation multiple over the last 52 weeks or so. And a lot of this, like I said, has to do with them just pricing in future growth. So the first company we're going to talk about is Apple. Apple's valuation expansion has pushed beyond its stock price. And a lot of this has to do with the company moving towards high margin, reliable service, and subscription-based revenue. Apple's stock, like I said, has doubled in the last 12 months, and its forward PE has been stretched even further. And a lot of this is based off the assumption, like I said, of subscription-based revenue becoming the primary driver moving forward. But this company has not been proving to do so. It's only making up 15% of sales and growing in the mid-teens. So this most recent earnings actually beat on the iPhone sales, which was unexpected. iPhone 11 sales were way higher than what analysts estimated, and this bread and butter product is becoming the majority driver moving forward. And honestly, this is concerning investors as they're investing in this valuation based off of their assumption that revenues are going to be the primary driver moving forward. But Apple still proves to be an iPhone-based company, and that might be the case moving forward. This PE multiple might not be justified, as the major catalyst, like I said, was service-driven revenue is not seeing a large enough acceleration in their figures. So on the other hand, Microsoft has been extremely successful in their transition towards the evolving consumer demand. The company has driven strong growth in its cloud computing segment, which is the future of this company. Microsoft's high margin and reliable revenue from cloud services is driving a significant portion of the company's profits. Its commercial cloud saw 39% year-over-year growth this past quarter, and its intelligent clouds revenue grew 27%. So this share price has rallied 70% since the beginning of 2019, and its forward PE to multiple grew half of that much. And I think this is justified considering, like I said, the company has been proving that their reliable, high margin, consistent revenue is growing at high enough percentages where it could be a growth stock again. Microsoft's been known as a legacy player in the software field for years, and this move towards the cloud is pushing it back into growth valuation multiples. Its diverse mix of must-have products and services and its ability to maintain its innovative edge makes this stock an attractive long-term play. So these are not the last tech stocks to report earnings. We got Amazon after hours today, and a few more in the next weeks coming up. So look for those, as well as more news on the coronavirus, as this might be a catalyst for more sell-offs in the market. So thank you for watching The Fourth Revolution. I look forward to speaking to you guys next time.